Okay, so now for those who have not gone through the previous videos, it's fine. You can always go back to those videos from here on out. All right, but nonetheless, I'm just trying to give you an insight into what exactly it is that the market looks like.
I beg.
All right, I just want us to be able to get an insight into what the market looks like. All right, from a simplistic point of view. Okay, so I was saying that you know, the market is usually a contest between the forces of demand and supply. All right, and economists tell us that an equilibrium market is virtually impossible. All right, an equilibrium market will be a scenario where demand and supply measure up perfectly. All right, this would be an example of an equilibrium market where when there is demand for 30 pieces, all right, there is only 30 pieces available, all right, where demand and supply match up exactly the same way, all right, where demand and supply is exactly the same, all right. So having said that, I was talking about the fact that just imagine a scenario where, say, for example, you have 30 pieces of fabrics for sale, all right, at $50 per piece. All right, you have 30 pieces of fabrics for sale at $30 per piece. All right. However, what you're getting is demand for 60 pieces. All right. If that happens to be the amount of demand that you're getting, the next thing is that at this point, if you really want to be a shrewd or an astute business person, all right, or you want to think like an entrepreneur, you need to leverage on this discrepancy. All right, you need to be able to leverage on the difference between the demand and the supply. What is the supply? The supply is simply the number of fabrics available for sale. All right, and the demand is the number of fabrics or the number of pieces that people are requesting for. All right, which means that the people requesting for those fabrics are buyers. All right. And then you, as the one who came to the market with the 30 pieces of fabrics, you are the seller. All right. But at this point where we have a demand for 60 pieces of fabrics, it means that there are more buyers in the market than sellers. All right. Because it is just you coming with 30 pieces of fabrics. All right. But there is a demand for 60 pieces of fabrics. So you can now decide that, okay, for today, you're going to be selling your product at $70 per piece of fabric. All right. At which point you would have been able to completely and entirely maximize your profits. All right. Such that instead of selling the old 30 fabrics for $1,500, you would have sold the entire fabrics for $4,200. All right, which is roughly times 3 of what you would have sold it for at the onset. Or sorry, you would have made that's 2,100. Sorry, $2,100. All right, which is almost times 2 of how much you could have sold it for. All right, which means you were able to leverage on that and make profits. Now, this scenario, if you want to interpret this scenario as a trader, all right, what we are simply saying is that the sellers came in with 30 pieces of fabrics. All right, let's label that as sellers. Let me change the color. So let's label that as sellers. And then we have this demand, all right, which is coming from who? From the buyers. All right. Now, at this point that we're saying demand exceeded supply, all right, because the sellers are going to be coming in with the supply, all right. What this means is that the sellers come in at the supply, all right, whereas the buyers come in at the demand. Are we getting that? The buyers come in at the demand, reason being that they are the ones bringing the demand. All right, so as a result of that, we're talking about these buyers coming in with greater demand than supply. All right, and as a result of that, prices went up. Prices increased by $20 per piece. All right, which means that in the market, if you want to position yourself better, you need to position yourself at the regions where either buyers or sellers find it easier, or at the point where buyers or sellers are actually flocking into the market. All right, which is why you see a whole lot of traders teach purely supply and demand trading. All right, and nothing more. They just teach supply and demand trading. Enter when you get to the demand zones, take a buy. When you get into the supply zones, take a sell. All right, we're still going to look at supply and demand in depth, but before we do that, let us look at a scenario where we have greater supply than demand. All right, let's say a scenario where you have greater supply than demand. So I need you to picture a situation where you have two baskets of apples, or let me say you have 20 baskets of apples. All right, selling at $30 each, and then you have demand for just 3 baskets. All right, you have demand for just 3 baskets. Now, the truth is, we know that apples are a perishable goods, all right? Apples are perishable goods, which means that there's a limit to how long you can keep holding on to these 20 baskets of apples. All right, and as a result of the fact that there's a limit to how long you can keep holding on to those 20 baskets of apples, it means that you need to find a way to get the buyers, all right, to buy more than this. All right, which means that at the end of the day, they will be buying it for less than $30 each per basket. All right, so what this means is that now I know you must have heard of sales programs where, you know, they say buy one get one free, or, you know, 50% discount, you know, summer sales, you know. Summer sales and all of those other kind of things. All right. Now, the strong point is that what they are trying to do is to ensure that there's an increase in demand. All right. They are trying to increase demand so that they can also maximize their profits. Now, at this point where, you know, 20 baskets of apples are no longer selling for, you know, it's no longer selling at this price, all right? So what then happens is that the price would have to drop, all right? Because the amount available in the market is more than the amount demanded in the market, all right? Which is something that gives rise to a whole lot of things. Like, for example, you see, let me give this funny illustration. I think I'm going to have to pause the recording so that I can give this illustration. So this is the way the market works, all right? Now, if this is truly the way the market works, all right, it means that we can now begin to predict the possibilities, all right, or the kind of reactions to expect from the market based on this information. All right. How then do we get to be able to spot and identify demand and supply zone? Now, in the course of, I believe that it's fine if I clear the charts right now. If it's okay for me to clear the chart, please just let me know. Or if you need me to keep the pictures or the images on the chart, if you need me to keep them on the whiteboard for a little longer, you could also let me know. But I'd advise that you probably take screenshots of this so that, you know, you can always look at it and then, you know, it gives you a quicker recollection of the things that we've done so far. All right, so you can just quickly save this. All right, so let's, I'm going to clear the drawings right now. Okay, so now as a result of this, it means that we need to be able to understand now, there are prices that are too cheap. All right. And there's also what we call too expensive. And when we talk about something being too cheap, we simply means that it has been oversold, all right, because it has had excess supply for a very long time, all right? And then when we talk about things being too expensive, it means that it has been overbought for a very long time, which means that there has been a large influx of buyers over a long period of time, all right? Now, these areas, all right, areas where we have prices too cheap, where we have commodities being too cheap or too expensive, those are the areas where we want to really focus on to get our entries, all right? Such that when a commodity is too cheap, all right, it means that there's every possibility that people begin to rush it, okay? So say, for example, now this is going to apply majorly to my Nigerian people, all right? Those abroad may not be able to really relate with this. But I want to ask a question. What if peradventure you get to find out that, you know, maybe Apple begins to run a promo where you can get the iPhone 12 Pro Max, all right, at just $200. iPhone 12 Pro Max, brand new, for $200, which is roughly around 120 something thousand naira, all right, for just $200. Now, I'm going to ask you, would you rush it at that point? Let me know in the comment section, in the chat box. Just let me know. If you hear that Apple begins to, or let me even give a ridiculous price, that they begin to sell iPhone 12 Pro Max, which is currently sold for about 500,000 naira. You hear or you find out that they begin to sell it for, say, 75,000 naira. Okay, 75,000 naira. Would you rush it at that point? Let me hear your opinions in the chat section. Okay, keep the responses coming. Keep the responses coming. I want to hear you. I want to hear you guys. Just drop your comments in the chat box. Let me know what you think. Mr. Tim, that's interesting. Now, the reason why we're going to rush it, all right, is because it is ridiculously cheap, all right? It is too cheap. Okay, now, this is exactly the same concept that I applied for this group training, all right? Because on a regular day, my course is for roughly around $200, all right? Now, this is going to sound really funny for some of you because you're going to begin to understand how I think. Aside from the chart, I'm a businessman and I understand how price works. Now, on a regular day, I would take this training for $200, all right? And probably I would train 2-3 people and that would be it, all right? However, like I discussed with Mr. Tim, I'm trying to build a system where I can have people who trade for me, run stuff for me, do the things that I would basically do my own self, do these things for me and still thank me for doing those things. all right? However, these people are still going to have to pay me to work for me. It doesn't sound reasonable until you consider the fact that right now you paid a certain amount to be here for this group training, all right? A ridiculous amount. However, despite paying that amount for this training, at the end of the day, we are both gaining, because you are going to be gaining a whole lot of knowledge, all right? This session is going to be recorded, and it will be something that I can always sell to anybody who is going to pay me $200 for the next 5 to 10 years, all right? So I am using this to build a foundation for something that I can. So I'm making it too cheap so that people can rush it, all right? And then I can sell again at a higher price later. I don't know if you understand that concept, but this is exactly what I'm saying. So you find out that the iPhone is now 75,000 Naira, which is roughly around $150. Then you will rush to buy because you know that at some point, all right, they would run out of supply. All right, let's say there are just 100,000 pieces or 20,000 pieces that they want to sell at that price, which means that once those 20,000 pieces are exhausted, all right, there's every possibility that the price skyrockets because there will still be so many people who still want to buy, but would not be able to buy. So at that point, you can begin to sell back to them. Even though you bought it at 75,000 Naira or $150, you can then sell back to them at probably $200, $300, $500, or $1,000, which is currently the actual price for an iPhone 12 Pro Max. All right, is that clear, please? Let me know in the comment section if this is clear to you, if you understand this psychology. Okay, beautiful. Now, the reason why I'm showing you this is because what we're going to be doing this evening, all right, is that I'm going to be teaching you the concept of liquidity. All right, we're going to be starting smart money concepts, but I want you to understand how liquidity works. All right, now everything I've been teaching you so far is actually liquidity concepts without me mentioning liquidity yet. All right, and it's intentional. The reason why I've not yet mentioned liquidity is because I want you to be able to understand liquidity from a psychological perspective, all right, rather than from a technical perspective. Okay, so what exactly is the psychology behind liquidity? Simple. Liquidity is simply how the market makers, all right, or the liquidity providers make commodities appear too cheap, all right, or the commodities that they want to buy, all right, they end up making it appear worthless and useless to so many people who would be buying it already, so much that they end up dumping it. All right, let me give you a scenario. And I need you to really think about this. So imagine you want to buy, imagine you wanted to buy that iPhone 12 Pro Max. All right, which was being sold at $150. All right, and then somebody like myself, I find out that you know, there are only, let's say there are only 2,000 pieces for sale. All right, now somebody like me, let's say for example, I have about I have about $15,000. All right, and as a result of this $15,000 that I have, I want to use the $15,000 to buy as many iPhone 12 Pro Maxes as I can. All right, now for $15,000, it means that I can actually get 100 pieces. Are we following me, please? It means that with this $15,000, I can afford to get 100 pieces. All right. Now, the next thing I will do is, because I want to buy more than one, and I know that many people are going to want to start rushing it once they hear the announcement. So one thing I can do is to prevent people from being interested in this thing. How can I prevent them from being interested in it? One, I could make a publication, a news publication that claims that all the iPhones are knockoffs, or bugged with malware, and now, what do I mean by this? People want to rush this iPhone because they heard that it is extremely cheap. All right. Now, I have $15,000 to invest in buying 100 pieces. Or let's even say I have $150,000. All right. I have $150,000. I want to buy 1,000 pieces out of the 2,000 pieces available. So what I can do is to make a publication that claims, all right, whether it's true or false is not the issue here. It is just a claim that the phones are fakes, all right, or that they have a malware or a virus that monitors your movement, all right, monitors your movement and begins to leak your data to hackers. All right, it leaks your data to hackers. Now, if you hear this about those phones, would you still be willing to rush to buy the phones? Let me have your responses in the comment section. Now, initially, when you heard that it was going to be this cheap, all right, you were interested in purchasing. But now, knowing that or hearing that these phones are fake, or that they have a virus on it that is going to monitor all your movements and start selling your data to hackers. All right. At this point, you will no longer be interested in buying. All right. Because you feel like, oh shit, this thing is worthless. I don't want to buy trouble. So much that even if you've bought it already, you'll just be looking for somebody that you can sell it back to at a cheap rate. You don't even care how much the person is going to pay. Is that true? If that is true, then this is the psychology behind liquidity. All right, let me quickly show you that. So a bank wants to, or one of the liquidity providers, price has been coming down this way, all right, and then price has reached a demand zone, all right. It has reached a point where it is too cheap, and they are aware that almost everybody in the market will be looking for a means to buy. All right, will be looking for a means to buy. So what they do is, in order to dissuade people from buying because they want to be able to buy larger quantities, all right, remember from the illustration, because I want to be able to buy 1,000 pieces, I need to discourage people from buying, all right, so that I will be able to get as many as 1,000 pieces for my own personal use. All right. So what they do is they know that people want to buy from this zone, all right, because it's already too cheap. So what they do is okay. So they do something like this, make it bounce a little bit, all right, so that many more people begin to buy. And then they make it become completely worthless. All right. So much that even those who have bought already, all right, start selling back and saying, well, this thing is nonsense. I just wasted my money. All right. Now, remember, they bought it for $150, but finding out that, oh, these things have viruses. All right. If they find somebody who comes to them and says, this phone, all right. Okay, let me throw this as a question to everybody. So imagine that you've already bought this phone, all right? You've already spent $75,000 or $150 to buy this iPhone 12 Pro Max. All right. And then you find out that there is a virus on it, all right, that monitors your every move. All right. And then begins to leak your data, your name, your date of birth, your passwords. It begins to leak everything to hackers. All right. If you hear that kind of a news and you already bought this phone and started using it, how much do you think you will want to sell that phone to anybody that wants to buy? What would be the price that would be on your mind? Remember, you bought it for $150. Let's keep the responses coming. How much do you think you would want to sell this phone? Knowing now that there's a virus on it that will continue to leak your information to hackers for as long as you use it. So let me hear. What would be the price? How much would you want to sell it? Mr. Tim, that's a smart one. All right, keep the responses coming. Beautiful. That's a very Nigerian response. He said it can sell for even $50. Even $50. Beautiful. Now, you see that at this point, you'll be willing to sell it off at any price, all right? Because right now, it's looking like what you have is already a very worthless commodity. Now, remember, I had $150,000 as my initial budget, all right? And in order to publish this publication, I might spend just $200, all right? Which means that I still have roughly about $149,800 available. All right, I still have 1,400 and let me quickly write that. All right, so I have $149,800 balance. All right, what this means is that with this amount of money, instead of being able to end up purchasing 1,000 pieces, all right, at this price, I might end up now. Imagine that all of the people that bought this, all the 2,000 pieces, imagine that all of them decide to sell at $50 now, all right, because they feel like the phone is now worthless. How much would I spend on buying all of those 2,000 phones? Just calculate it. How much do you think I would end up buying all of the 2,000 phones? If everybody that bought the phone, all of the 2,000 pieces, end up selling at $50 or lower, how much do you think I would spend overall on buying all the 2,000 phones? Beautiful. So it means that at the end of the day, I would spend just $100,000. All right, and still have a leftover of roughly $49,000. So is this smart or not? What do you think about this? Because at the point where everybody now begins to sell and say, oh, this phone is completely worthless, I regret spending my money on it, what they do is they buy back. All right. So this is what liquidity grab is. This is how the market works. This is how the market makers think. This is how the liquidity providers think. All right. So do you think this is a smart concept or not? Let me know in the chat, in the comment section. So much that instead of spending $150,000, you end up spending $100,200 on the overall. All right. Now, this is the foundation. This is the psychological basis for what we call smart money concept. All right. This is how smart money concept works. Now that I have spoiled the market, who will buy from me? People will now buy from me because they find out that the news publication was a lie. Remember, the publication was not confirmed as true. It wasn't. So all that this person played on was the wisdom of the people and their fear, all right, their emotion. Get them emotional, get them into panicking and selling, all right, like the way they do in the crypto market. Get them to be so panicky and then quickly sell off all of their accumulations. And then after a little while, buy back from all the people that are selling. All right. Do you understand the concept now? Do you get the basic foundation of this thing now? If you do, just drop an emoji or a comment in the chat box. Let me know that you get it. Beautiful. So how was this session? Have you enjoyed this session so far? Have you enjoyed this session so far? Let me quickly get your responses on that. We're going to be starting the next session very shortly. Oh, beautiful, beautiful. We've only just started, all right? We've only just started. I still have so many more mind-blowing things to show you guys, all right? So right now, we're going to wrap up this session, all right? In the next 10 minutes, we're going to reconvene, all right? So by 5:30 p.m., we're going to reconvene once again to continue smart money. So during the next session, we're going to look at smart money and the patterns that smart money begins to give us, all right? Because those patterns are the major things that we use to identify where smart money has occurred, all right? Even if I have to spend another round of money to, to get people to start buying again, all right, I will never spend more than $200. I will not have to spend more than $200 because all I need to do is to make people realize or to publicize that the news is fake. It's as simple as that. To just let them know, oh, that news, it wasn't really true. It was just an assumption, which people will forgive me for it. Anyways. Do you understand the concept now, Mr. Emmanuel? Exactly. But at the same time, it's going to be more expensive now because people are now going to realize that they actually still need the iPhone. So this is how the market makers continue to manipulate the markets day in, day out, all right? And they escape with it without anybody holding them to it, all right? So the reason why I'm teaching you this is so that when they begin to manipulate the markets like this, all right, you will be able to also jump in and ride with them, all right? You'll be able to identify, oh, this is what the smart money is doing, and then you'll be able to also take a ride with them, all right? So quickly take a screenshot of this. We're going to stop this session right here, and then by 5:30 p.m., we are going to reconvene once again. Is that fine with you, everybody? All right, beautiful, beautiful, beautiful. So 5:30 it is. See you in the next one. And I love you guys. Bye-bye.